Hey everybody, today we're going to be doing another dividend analysis, and today we're going to be looking at Lockheed Martin Corporation, or LMT. I wanted to do LMT mostly as a little bit of vindication for my predictions, and also because it's kind of interesting because of its place in its industry. So as usual, we can start by looking at the yield. It's currently about 2.7%. Again, not something that's amazing, but it's definitely respectable, higher than what the S&P pays usually. So it's definitely a dividend stock of some kind. If we go back through the history, we can see that over the last 8 years, they've been generously increasing their dividend from $1.15 a share up to $2.60. What's particularly interesting here is the rate at which they're increasing the total amount has been going up. We can see we were at 17 cents, then 15, then 17 again, then 18, and now we've gone up to about 20 cents for each increase. So the actual real amount that is increasing has been going up over time. So that's definitely nice to see if you're a dividend appreciation investor. Even if you were looking at like income investing, seeing the actual real amount go up from, not just a penny or 2 pennies every year, but actually going up a certain amount is nice to see. Next, we can go check our financials, and we'll start by looking at our free cash flow and going over the last 12 months. We can see that our free cash flow is down actually very, very interestingly. We went from about $6.5 million to just under $6 million. Granted, last year probably had some issues for obvious reasons, but over the last roughly 7 years, we're looking at very flat free cash flow. If we cut out last year, we can see we went from 6.7 up and down to about 6.4. So not really a lot of free cash flow growth. That's something to keep in mind if the dividend continues to increase and they continue to increase the increase, as it were. That is going to be something to keep in mind. But if we actually look at the payout ratio, we can see that last year they paid out $2.7 billion in dividends. We divide that by last year's free cash flow. We get a payout ratio of 47%, under our ideal range of 50%. Not by a lot, but definitely under. So there is room. So going back to that free cash flow, we can see that even if their free cash flow stagnates, they still have plenty of room for those increases for a few years. And if the free cash flow does start to pick up, then there's really going to be no issue, no worries about a dividend cut or suspension unless there's something huge that happens. Next, we can go look at our income and check out our payout ratio there. Our net income last year was up substantially from previous years, and if we do our little division there, we see that they are paying out about 40% of their income as dividends. Again, well below our ideal range, and if this income increase continues, even if it's just a little bit like this, 700 million or even less than, even half of that per year, there's nothing to worry about. That payout ratio is very safe. We're well within the ideal range. Their income could be halved and they'd still only be paying out 80% of their income, which isn't good, but it's doable. So nothing to worry about there. Lastly, how do they make money? So Lockheed Martin, as most people know, is a defense contractor. The bulk of their income is going to come from the F-35 program, as we can see here. They also sell other things such as fire control systems, missiles, helicopters, satellite stuff, a bunch of stuff, well diversified. However, the F-35 program does take up the overt majority of their business. So what does that mean? If you know anything about planes, I'm going to try and keep this unpolitical, but the F-35 is a piece of garbage. The pilots that I've known have said that it is a golden trash can with wings, but because this is the military-industrial complex, it's still going to be sold because of the way money moves between hands in that complex. Now, that being said, is what they're doing currently sustainable? Are they going to be able to continue making the money they're making the way they are? If you don't know anything about politics, the way that defense contractors work is when there is a chance that there's going to be any kind of war or conflict, they perform well. When those chances go down, they tend to perform poorly. Since we currently have a establishment administration, you can be sure that Lockheed Martin and others are going to do well. As I called back in January and February of this year, I said that they would rise simply because the current administration is legacy administration. It is swampy as all get out. They will continue to do well. The U.S. will get into conflict, and they will profit from said conflict. Now, the only way that they're going to do poorly is if maybe in a year and a half or in 3.5 years that changes. Until then, you can expect them to at least trade sideways, but probably to trade well. They're probably going to get back over $400 a share. Not saying it's going to happen, but it's very likely given the way politics and economics work together. So, who is LMT for? Should you be buying it? Should you even consider it? If you're an income player, this really isn't anything. Less than 3% isn't going to do much for you. However, if you're looking at dividend appreciation, as we can see from the past 8 years, you're going to be getting likely a 20 cent increase per share each year, which actually is about 20%. The other thing that you could do here is if you're trying to play politics in the stock market, if you're trying to follow that, this would be something to look at. If you're looking for something where, I'm looking for a way to play the way that, politics works with the economy while also getting a dividend, this is something you could do, as well as its like competitors, General Dynamics, Raytheon, things like that. Those would be things to look at here. Those are the two big groups of people that should be looking at this, either dividend appreciation or trying to play a growth story that has to do with politics while getting a dividend. Outside of that, LMT can be kind of a prohibitive stock just because of the actual share price, $383. If you don't have a lot of capital, it's not going to be very easy to buy shares. You might only be able to afford one a month or every 2 months. If that's the case, there's other things you can look at. You don't have to, there's no FOMO with Lockheed Martin. But if you have the capital to invest and you're one of those two groups of people, this is something to look at. I hope this helps, and thanks for watching.